So yeah, with this we are pretty much done with all the logic and reasoning aspect of national income accounting. Now we'll be going through these can be called as some mains topic, but it's also application oriented, and which is pretty straightforward. So they can ask in prelims also. That's why I've included these topics. First will be what are the factors in determining GDP and national income. That is, the question can be like what action should be done or which of the possible things will increase national income. It's a very straightforward. Essentially your factors of production. When they increase or decrease, definitely your national income or GDP will change. That is your land, labor, capital, and entrepreneurship. Similarly, technology. Once if technology changes, like for example, if I'm using a more efficient technology, means I'll get more output from my input. So definitely my national income will change. Similar thing, government policies are like ease of doing business. Like basically what will happen, like when government eases like the bureaucratic hurdles and etc. through single window clearance, definitely more investment will come. Obviously your output will increase. Similarly, what political stability. See, political stability gives certainty in policies. Or like if the government is stable, definitely the policies will be stable. When the policies are stable, businesses will be confident to invest. So essentially investment increases, virtual cycle kicks in. Okay, so that is the thing. Last important thing is we'll be looking at last before, that is resource endowment. Like a typical example of resource endowment will be your Middle East, where because of oil they have a lot of oil, the national income is high because that is a much demanded resource. So if your geographical location is such that you have good resources, definitely your GDP will be high. And apart from that, all the expenditure parameters like consumption. Basically, if you look at consumption means, this is MPC means marginal propensity to consume. That is, people have high tendency to consume. Definitely GDP will increase. For increase like in the national income, definitely people consume more. That means if I'm getting an income increase, I'm consuming more out of that income means definitely my GDP, I'll be demanding more goods, definitely my GDP will increase. Similarly, like what? FDI in investment. Like I'm already having some investment. On top of that, if foreign investment is coming, definitely that will create a virtuous cycle, GDP will increase. Last, budget. Yes, definitely budget will have an impact. Directly itself, we have seen how budget impacts the GDP through expenditure methods. And apart from that, export promotion, that also we have covered in the expenditure part, how it impacts the GDP. Next, we will be looking at what are the difficulties. Like basically we are looking at measuring national income, but definitely in arriving the right output, in estimating the right output, there will be some difficulties. So what are the difficulties with respect to India, sir? That is what we have to give. First thing is the barter, sir. Like basically even in villages today they don't exchange via money. Like basically you give money and get goods. Instead of that, they exchange for goods. Like basically 5 rice bags for one chicken, maybe something like that. So they exchange in that manner. So when there is non-monetized transaction, obviously through barter, obviously your GDP will not be clear. Similarly, if there's a large amount of imputed transaction, like a simple example of would be like almost like the male labor force participation is 77%, while female is 22%, very less. Like there's a stark gap, but lot of the female are contributing at home. Okay, they are generating services at home which has value. So that means because they are not accounted, your GDP is going down. Imagine if all those women will come out tomorrow for work in a formal sector, what will happen eventually? So if, for example, if women comes out, means they will hire a maid. That means automatically all those imputed services get value. So when imputed services are very high, or this care services or etc. are very high, definitely you will not get a proper output, like proper value of national income. Next important thing is illegal income or black money. Essentially they will not be recorded anywhere, sir. When the record is not there, definitely you cannot take statistics, and definitely they will not account for national income. Last thing is non-availability of data. Why India has non-availability of data? Major thing is dominance of household or organized, unorganized, or MSME. They call this micro, small, medium industries. All those things, they don't maintain proper records, sir, or they don't they are essentially outside their formal tax net and etc. because of all those incentives. Plus they don't have the manpower to maintain all those records, formal records, etc. So that is the things. And another example will be agriculture. Agriculture is not at all taxed. Okay, so whatever, so and more than 45% of your this thing workforce is in agriculture. So in that case definitely we will be seeing that in that case definitely we'll be seeing we will not have right data. Apart from that, what, so basically service sector value addition, basically in manufacturing, I can clearly say basically before that there will be a lump of plastic which will be made into this bottle. So I can clearly see the value addition. But service sector, since all is service involved, like human involved, you cannot clearly see the value addition. So in all those cases, data collection becomes difficult. That will create difficulty in measuring national income or GDP, sir. Next, finally, we are using, so basically there is an increasing stress on GDP as a parameter of progress. Like every time we are seeing that government, every budget comes, government says, government says that, GDP has increased so much, like 8% increase, like especially 2004 to 9, it is called as dream run of growth period because the average GDP growth is somewhere 8 to 9%. On an average, it was going. So something like this, GDP is stressed and given so much importance. But should it be? That is what essentially we are going to see the shortcomings or issues in using GDP as a parameter for progress, sir. So what are the issues over here? First thing is gender aspect of things. GDP does not say whether there is a gender parity in wage or gender parity in labor force participation, that is, are they equally working or not. So we saw, despite India has a good GDP growth track record, we saw how males are working more while females are working less. Similarly, in wages also, males get more, females less. So it essentially does not give any info about that. Second important thing is economic inequality. That means we recently saw in the World Inequality Report also, India topped the inequality. Even in earlier Oxfam report, they said that top 1% has 73% wealth. So we can see how the wealth and income and etc. are skewed in few hands. Essentially, your GDP is not giving any insight, sir. For an ideal economy or for a progressive economy, it should be evenly distributed. All should feel even. All should feel equal access, equal access to opportunities and all will be there. All those things are missing. So essentially these aspect of things will not be covered in GDP. So, and apart from that, it also does not measure your sustainability aspect. Okay, sustainability means what, sir? It is a very simple thing. Today India is able to generate let's say what 2 trillion or 3 trillion $3 trillion GDP, but there is a pollution involved. Okay, there is a resource extraction involved. So as we extract resources, what resources will be getting depleted, sir. When less resources are there in the future, can we sustain this GDP growth? There is no question on that. Okay, so if we keep on extracting, definitely future your GDP growth will decrease only. Unsustainably if you extract. Rather, you should extract sustainably to have a sustained GDP growth. That means what? You should either recycle or you should extract less, you should reuse, recycle, all those techniques can be used. So that is with respect to sustainability that GDP does not give. Next important thing is it does not say anything about standard of living. Just because a country is having high income does not mean that it has good standard of living. For example, let's take Middle East. Like women are not treated well. Women are not even giving driving license, etc. So they are not having the same standard as men. So and not all people, and again that like in country like India there is a widespread inequality. Okay, despite GDP is such a large country, India it's the 5th largest GDP. India has the 5th largest GDP. Despite that, we are having so much people in poverty and all those things. So essentially it does not give any insight about standard of living, sir. And apart from that, GDP counts both good and bad, sir. Good and bad means what? See, let's say in Delhi there is a lot of air pollution. Because of that, the people who are going to go to hospital, that number has increased, sir. So that means what will happen? People are taking more hospital services. Essentially what will happen? GDP will increase. But is it the right way to increase GDP? Definitely no. That means even for increasing bad commodities, your GDP will increase. So these are the shortcomings in using GDP as a parameter of progress. So this will further be covered in our growth versus development class. That will be the second lecture, elaborated, but I've just given an insight whether GDP is a perfect parameter or not. But otherwise GDP definitely is one of the parameter, but it cannot be the primary parameter, sir. Next important thing is, this is again another factual part. Basically, after 2015, there are some changes in GDP calculation. In fact, there was already this year mains question was there, sir. Like this year mains first question, and in fact, every year mains there's a question. Definitely, there is one question coming on GDP. Like last year, there was a question on potential GDP. This year, they asked a question: what are the changes? So definitely, GDP is becoming one of the important topics. Okay, so essentially what is it? What are the GDP methodology changes? So this changes was initiated through UN. UN has adopted a new system of account. Because of this, the changes happened. Sir, changes I always put delta. Okay, so what is the changes? Based on this only, the base year was changed. I've already said the base year was 2011 to 12, and we moved to market price. GDP at market price from GDP at factor cost. And we have also created a new, e-governance database, sir, MCA 21. Earlier it used to be done by ASI, Annual Survey of Industry, which was used for IAP. So now from that we moved to MCA 21. So essentially increased coverage. Okay, and another important thing is informal sector. The assumption in MCA 21 is informal sector grows same as formal sector. There are some controversies in using MCA 21, that is with respect to mains, that will not be dealing here. If mains classes come tomorrow, definitely I'll be addressing that part. But yeah, so these are all the changes, recent changes in GDP calculations, sir. With this, we'll be moving into just another one topic, which is called as green GDP. So what is green GDP, sir? So we have already seen that why GDP is not a perfect parameter. This kind of try to counteract one aspect of things. Essentially what you will calculate GDP, sir, and on top of that you will remove those GDP contribution through unsustainable resource extraction, natural resource depletion, and because of the pollution cost. All those things if you remove, like I will be calculating my GDP. For the GDP, some part would be unsustainable, right? Like let's say like some part through some corruption there was unsustainable sand mining, which helped in construction. That part I will be removing. And similarly, like Delhi regions, there is pollution. Because of pollution, hospital services, there is GDP increase. That parts I will remove. The residual what I get, that will be called as green GDP, sir. So this calculation of green GDP is done through green accounting. So this is just a prelims fact, nothing much. So yeah, so these two are the key things here. You remove natural resource depletion and environmental degradation, pollution cost, so GDP, to get the green GDP. It was tried in China, but India, it has still not tried, but you can always use it as a way forward, or in case asked in the prelims, you can always remember what contributes to green GDP. Next, we will be moving into potential GDP. See, clearly the name itself says, potential means what is the maximum GDP you can have. So, but maximum GDP means what? What is the maximum GDP means? But essentially it is a maximum growth rate which is sustainable, sir. That means what? That you will be employing, you will be employing your labor and capital, and you will be doing your production, but that growth rate you should be able to sustain for a longer time. It should not be fluctuating, like you grow for a certain period, then you come down. So that should not be there. That this growth rate should be steady. So that level of GDP growth rate or GDP is called as potential GDP. Okay. And essentially they have also asked us a determinants of GDP. We already saw 5-6 points, like all those points added here. Apart from that, what you will be saying, labor and labor productivity, capital. So essentially you will be reusing those points. There is no point in adding those things. So you take those things, determinants of GDP and determinant potential GDP, they are essentially same. So in case for mains, you can reuse those points. So with that, we'll be coming to gross value added. So that will be the final topic.